TGIF, thank God it's Friday. It's been a very much of a roller coaster week because we had that CPI on Tuesday and we had like an aftermath and a hangover the following day, and we've seen a lot of whipsaw on risk appetite. So I think for us, we still need to be very careful because we're fluctuating on the zero line, which means risk on, risk off. So it's kind of undecided at the moment. VIX has been, it's quite high. If we go above 26.5, then that's going to be quite risk off because the big fish will definitely be looking at VIX. They might not look at retail herd sentiment, but they will be looking at the VIX. And so if we go above this important level, they're probably going to have some sell algos coming in. And we know technically S&P's got some resistance overhead. We're going to have a strong USD and a strong yen as well. And that gives us a safe haven indication that they're going to be potentially be bought. So these are safe havens. We've got the risky currencies, the Kiwi and the Aussie over here. Pound's probably going to have moved since the making of this bulletin because I did it an hour ago. But yeah, so we've got safe haven flows coming into yen and the dollar, okay? And we've got a bit of indecision on our risk calc, but the VIX is being pumped, so we need to keep an eye on that. Yeah, so we're risk off at the 24-hour difference, okay? You'll see why. Yields rose. This is not what we want to see. We don't want to see the long and the short and the long reduce because it just gives us a curvature. And I'll show you what I mean. There, it's really enforcing and encouraging this curve, and it's actually quite unhealthy. What we want to see is these numbers to get higher in increments like that, not to go down at the long dated. So this is risk off. And, you know, we had the big heads up about this. This isn't really going to lie, whereas potentially you're going to have quite a lot of fake nonsense in FX and potentially in indices, but the yields, they're not really going to lie because there's too much money involved. And so this gave us the heads up on the risk off anyway. I don't know how this is going to get fixed. It's probably going to require a softer USD. But we can see the retail positioning that the dollar is strong. All right, so UK 100 was a large mover and Euro Yen, but note that there's a mismatch. We want that to be red and red, okay, for a sell. And they're basically just reducing their positions quite heavily. And if they continue, we will be a sell at the high level. And it's been an absolute nightmare to trade, I think, this one, because we rallied like parabolic. And now we're possibly going to dump because we've got that strong yen. You'll see the bubble. USD is encountering, well, the currency is trying to counter the USD, and Euro USD was the laggard there. And we managed to eke out a tiny bit there, just trying to fight the dollar right now. We don't really, I don't know if you want to be fighting that really. It's look at the 6 month, 1 year. It's very strong. NU was the laggard and dollar CAD is the leader. So that shifted. It was the dollar yen. It was going pretty crazy. And now it's just weakened a little bit, but we're still positive from the week prior. This is from last Friday. So this is the data that's rolled over. It's not from Sunday. It's from last Friday. Okay, so that's important to note. I can't remember what my trade of the day is. Yeah, well, oh yeah, I remember now. Yes, I do remember. God, it seems like ages ago. But we will require the New Zealand dollar to weaken, which it should if we look at the bubbles. Now, should is in speech marks, okay? Nothing is guaranteed, but we can look at shoulds. We can look at probabilities and likelihoods, and the sentiment gives us that. Bulletin tier says £8. Basic is Discord only. And this is a little discount on the premium tier if you're an FX as a size subscriber, and you get a £5 discount, which is pretty decent. So you get Discord and the spreadsheet. So there's the Patreon link, there's the Discord link, and S&P. So we've got the 21 moving average. So I'm probably going to be referring to this because I think this is going to be acting as a resistance now, and so possibly down we come. S&P is likely going to teeter over. So when I do the video for the private members after this bulletin, then we can see how that's developed. But I think this is going to tip over to sell. Okay, because you look, technically it's looking quite bad, and especially if they're trying to buy this dip and we're technically pretty heavy, it's not going to be good. And this is going to help our trade of the day if this falls. Right, that's important. So they went long at the CPI, and then they went long again, and they might short. I would imagine they probably would be getting pretty scared right now. There's not much support. If you look left on the hourly time frame, they're thinking, oh, maybe I should get out. I don't know what they're going to do. No one knows for sure, but you can see if you get the trading station, and you can see what happens. And if they short it, then this is likely going to be a bottom. Okay. Hexagon warrants a caution. It's they bought, they sold, but nothing really happened here. In fact, they probably got paid a little bit, and then they went long, so it fell. Just went sideways a lot, and maybe they'll sell it here. I'm not sure, but we'll cover this in the 2-minute video. So yeah, DAX is actually bonkers. There's the, they sold it, so it came up. They went long. They got paid 1, 2, 3, 4, 5 hours. They got paid, and then we had that big dump, and they went long, and so we're falling. So pretty horrendous. Okay, gold. Now it's taken the stop loss cluster below. It was 1660. And the size was 2% ish. So I'm looking at that today, and seeing if the size gets smaller and if they move their stops lower. I suspect they probably will, but I imagine that they're going to be scared out of their positions pretty soon. But we're dealing with apes. That's the trouble. Like I said yesterday, we're not dealing with sheep, because sheep would get scared and then they'd get out. But when we're dealing with apes, they hold on, and that's what's causing this. The skew on some of these instruments is that if we're looking at sentiment and things are moving because of sentiment, then it's going to be quite extreme. If they're holding on and their risk management's poor and has to go and liquidate those guys, it will continue going until it liquidates them. Like the dollar yen, they were short, and then they added short, and then they added short, and they kept doing it for weeks and weeks, months and months, and we got to 24-year high. And so that's because of the apes. Maybe you could argue we had like central bank divergence and things like that, but the retail guys were shorting it all the way up, and price went up to punish those guys. So we're dealing with apes, so they might move their stops lower, and the size might even increase. So we have to be careful. The liquidity target. So AU is the largest one. And that's the location, 66.70. Not much movement, which is interesting. And the largest mover was EA at 7% shift. And our failure rate needs to improve ever so slightly for New Zealand dollar, because that's our trade. And maybe we could wait for 6 out of 6. I mean, it's probably okay now, maybe. But it's an okay score. Monday, Tuesday, we were 48%. And so it tells us that it's worse odds than the casino. Yesterday's trade, so GU, I was saying trade safely. We did fall, and you can see the time. And then this is the close, so 73 pips. We did get it a little bit earlier, but I'm going to count 40 pips on this, which is okay. It's not bad, is it? And you can see it's time stamped as well. Boom, boom, boom. And that's from the bubble logic. In case you're wondering, we're looking at the bubbles. Technically, we're extreme, so it's a little bit boring from a technical perspective, but that's just the technicals. And economic calendar, we've got CPI, and we've got the Michigan consumer sentiment. Now, back in the day, this used to move things a lot. They're probably going to do it again, but we've got to keep an eye on the CPI. And, we have to wait and see. It's going to move the euro a lot. Keep calm, always trade safely. Know where your exit is, because you might have been trying to buy gold and you probably think, maybe it's going to bottom out soon. And if you haven't got an exit plan, you would have got quite destroyed on that, because it looks like it's going to continue to fall. And so you do need to know your exit. you might have been thinking, oh, I'm going to hedge now, and you might have taken profit on one side of your hedge, and it's continuing to fall. Without an exit strategy, you're going to encounter losses. Even though you made a little bit of profit on your hedge, let's say hypothetically speaking, the losses that you're going to incur from not having an exit is going to override that profit, and so the profit will be for naught, right? So you do need to know your exit. Really, really, really important. And there's some links here, so you click those links if you like, and you're all welcome to join Discord. Do note when you join, you get 24-hour access, unlimited access, but after 24 hours you'll get removed, and it's not me who does that. We've got a robot in Discord that does that. It simply removes your trial user permission, and then you just get no permission. So you get 24 hours. If you want full permission, then you need to subscribe, and you get a lot of content and a lot of stuff. So be careful. Know what I was saying about exit strategy, because things will go and punish. You know, they can punish you unless you know where your exit is. And you know, with gold, we should be falling because the sentiment, and they were added long, so we should be falling. And we're dealing with apes, so they're probably going to get squished. So we'll see how we go. We've got 5 minutes for London Open. I'm going to just get a coffee, and then we're going to do a 3-minute video on the indices, and we're going to look at gold as well. And so have a good day, you guys. Be careful, and I'll speak to you on Monday for the COT data.